Hello and welcome to Trade of the Week. I'm Zinati Guma and joining me for today's segment with a technical analysis on Harmony Gold, Goldfields and the new gold ETF is a senior technical analyst from the Money Hub, Moxima Gama. Thank you so much for your time, Moxima. It feels like right now everything that glitters is gold or the dollar. Depends.
Everything is determined by that. So the reason why I chose the topic right now is because, you know, gold is seen as a safe haven during these geopolitical uncertainties. And with given the and you said interest rates, what was it? The elections.
There we go.
Given the elections, we just kind of wanted to know. And gold has seemingly pulled back quite significantly since then. So I just wanted to clarify to the viewers if it was a justified pullback in terms of it had to, because it's just the nature of an uptrend. It has to pull back, or is this
maybe run too hard?
It's run too hard, exactly.
Yeah.
Or is this just a pullback only for it to jump back up, which then gives people another opportunity to get back into the market, because, you know, gold is just on one way upwards. So I've done a bit of a gold analysis and then moved on to the other three shares, and I'll explain. I'm using the Dow theory, but I'll explain it as I go through what it actually means, and so on. Yeah.
All right. Okay. Well, let's actually start off with Harmony Gold, because that's actually one of the gems that we've got on the JSE in that gold sector. I mean, you even find that in times when all the other gold miners are experiencing operational challenges, Harmony Gold is really the one that very resilient. They do well in production and obviously benefiting from that higher gold price. What have you seen there?
All right, so I'm going to start off with the gold price first.
Yes,
and then we'll get back to get to Harmony. So let me just explain what has happened at this point. We've seen a lot of upside. This is pretty clear. This gold is on a one-way track. And the pullback, like, it's just amazing. It's just, I mean, I remember when I was looking at gold a few years back, it was at 400. I won't mention my age. It was at 400, and now it's at 2,000, you know, almost 2,000. So it's pulled back, and in this case, it's just the whole determination of whether it is a justified pullback or not. As you can see, it was overbought on the weekly chart for almost 4 months. So it makes sense as to why it's kind of pulled back. But the question is, will it retain its uptrend, right? So I've got that little circle there to show that it's testing that support trend line. And if it bounces there, as well as the RSI bouncing from that oversold position, we could actually, it could confirm, or rather positively confirm, what is known as a flag. It's just a correction, corrective bear trend, but that would only be signified if it starts trading above 2,685. Otherwise, if it doesn't do that, there's a continuation of this pullback. So from there onwards, we could see the target is actually at 2,990. From the breakout
not 3,000.
Well, I mean, I'm sure maybe it's just a little bit there, but it just baffles me that it could go that high towards 3,000. Now, that is if it trades above 2,685.
Okay.
If it does not do that, and in fact trades below 2,485, it would then mark the end of this particular uptrend, and a correction would then be underway, potentially seeing gold fall back to 2,280, which would be quite a surprise, and it could actually even pull back to that green, or rather the blue trend line. So at least we have the levels that above 2,685, it's a continuation of the uptrend. But if it goes or trades below 2,485, that then means it's the correction is now turning more into a bearish mode that could see it fall to 2,280. So park that in your mind, right?
Yes. So
that you can see what the other gold shares are doing.
Yeah.
So the Dow theory that I was mentioning to you, I usually really love it. And just to simplify it, I usually say it's excuse me, it's a measure of the level of optimism or pessimism, right?
Okay.
And what the Dow theory says is, as investors get even more optimistic, the trend becomes steeper on either side, upwards or downwards. Now, this is basically, this trend started in 2008. This is New Gold. Like New Gold.
And that's the company, that's the mining company. Yes, okay.
New Gold itself, I mean, from 2008 is on one way. So if you were invested in 2018 up to now, you're smiling. And this is where the Dow theory comes, that it's gone through the first phase, the second phase, and it's on the third phase. And the theory says once it reaches the third phase, it can do a fourth phase, which means it's steep upside.
Yes. And
it's steep upside is usually not sustainable, but usually it stays on the third phase and then it starts to pull back.
Okay.
So if you're invested in New Gold, one thing you need to be aware of is it's on the third phase, which also means not in a very dramatic way or a depressing way. It is kind of like the last kicks of a dying horse when it's on the third phase. You make the quickest returns in the third phase, but it's also when it reverses, you need to be on point, because that reversal could be quite steep.
Yeah.
So it's on the third phase. Now, trying to zoom into it, you can see that uptrend and those third phases. And now we need to figure out which is the level that will give us the upside continues, or where the correction will then start. So as you may see at this point, it's really teetering on that third phase of the trend line. And if it bounces there and the RSI continues with those rising bottoms, then upside would continue if it trades above 457.85. That's when we could then see another move to about 500 and 230. I really think that would be possibly the maximum where it will start plateauing. So there is another 10% move for it should it trade above 457.85. But if it doesn't, and instead breaches that trend line and trades below 420, then the correction is likely to then begin to either the second phase, and if it trades to, it's not much, it's probably a 10% move or 8. But the thing is, if it starts trading below 387.55, then that pullback might be steep, because then it could go down to that trend line. So that's when you just really want to get rid of your investments in it, because then obviously if it's going to fall, you're going to lose out on those returns. So those are the two levels. And generally, if it corrects, it will be below 420. It's an 8% drop, but if it drops below that, then it's probably more. Yeah. And then if it goes up, it would be at 456.85 with a 10% move upwards. So in this case, it's already on the third phase. Now, if you look at another share like a Gold Fields,
well, actually, I'm just wondering with New Gold, why? Because, I mean, it's not a company that we talk about, particularly seeing that it's a Canadian mining company. But did you choose it because it's one of the ones that have run really, really hard?
High, yeah.
Okay.
So in terms of, I know it's clients who are invested in it, and the thing about investing, so people always say it's investment it's a buy and hold. But I'm like, it's buy and hold until the bull trend starts giving in, you know? And if you have the opportunity to be able to get in and out of the share, you need to be aware of the certain levels. So you could still be invested in it, but we're in that very tumultuous terrain where it could completely correct, or you could make more gains. So that's where that was the purpose of New Gold, to kind of show you that Dow theory, which then comes to the second part where then the Dow theory makes sense for you for Gold Fields. Yes. So it's broken out of its bear trend, which started in 2006, and it broke out in 2020, right? So that's the first phase, and that's the second phase, which then means the third phase is still underway.
Okay.
So you could still, so if you're going to get out of New Gold, you'd look for something that still has upside potential.
Then there's Gold Fields, okay.
Exactly. So Gold Fields, if we then zoom it in, that's it's broken out, broke out there. It's in the second phase. A bit of it's a lot of for as long as it's in the uptrend, there has been a lot of up-down movement, very tumultuous as you may see. But also key is that it's testing that trend line and it's bouncing, and its RSI is also forming those rising bottoms. But this upside will only continue if it trades above 262.95. Then we could see it head off to its all-time high with that ambition of potentially starting the third phase.
Yes.
The third phase could start at 359, but there is room for upside, in other words. That's what it's trying to say. Unless it, of course, breaches this, trades out of this trend line, and in fact trades below 222.75. Then it means, it could pull back to about 196 and to the second trend line, or even the 162.35, which is a 15% move. So it's up to you. Do you want to lose 15%? Do you want to?
Which I would say, it wouldn't surprise me if it actually did pull back, because, I mean, obviously we know the risk with investing in gold miners rather than the gold prices, that they have that operational risk as well.
They do.
And it's quite interesting, because I think Gold Fields came out with an operational update last week or 2 weeks ago, and as much as quarter on quarter, we did see an improvement in their production and costs, but also investors still dumped the stock, because based on a yearly basis, those metrics actually pulled back. So
they have to dig a bit further.
Yes.
to get gold now. It's not like it was previously, and that is costly. So although the gold price does mitigate some of the expenses that they're going through, but the fact is, so that's when people are like, I'd rather just buy the commodity itself.
Yes.
But yeah, you know, in a portfolio, gold shares also do. I mean, they have been outperforming this year better than well, most metal shares. I mean, I think it was been the outperformer gold shares. Yeah. Metal shares and platinums have just fallen.
Of course. Let's go back to that chart.
So which chart?
The gold fields, yes.
So this is the one, So in other words, your correction. So in your mind, you know, once it trades about 222.75, you know, it may correct, 12%, I thought it was 15. But if it goes above, trades above 262.95, then that means the correction, the upside continues, and you could still make another 37%, provided that it stays within the second phase. Do you get what I'm saying?
Right.
So if you're traveling and you just see gold fields is trading at 270, just know that it's retaining its uptrend.
Okay. Right, got it.
Cool. And then the last one would be Harmony. And look at Harmony. It's just started its first phase. So then you know that, so there's much more upside potential for Harmony than it is for New Gold.
And Gold Fields.
Yes. So it's pretty obvious in this case. It's broken. So this bear trend started in it was actually 2002. This is completely wrong. Sorry. And then it only broke out in 2014 from this trend. So it started its first phase now. So it's 1, 2, 3, right?
Okay,
and so there's upside potential. If we zoom it in, excuse me, this is where the breakout happened, and we're on the first phase, but it's also testing that trend line. So RSI bouncing on there. So if it happens to bounce there and the RSI also bounces on that, then it means it's retaining its uptrend. But what is the level that will give us surety that, well, not guarantee, but at least a promising level that I could say, okay, it's actually decided to retain the uptrend and trade upwards. So that level in particular would be the 187.45 mark.
Okay.
So above that level, it then gets out of this little murkiness that it's in, resumes its upside towards 214.10, and I actually calculated a target that it could go to 241.55. So you're better off, if you want to offload some of your gold shares, is probably getting into Harmony because it's just started its phase. Alternatively, of course, there's always an alternative scenario. Trends don't go up in a linear format. If it does, in fact, RSI gives in, number one, and then if the RSI gives in, then you best believe this trend line is probably going to give in as well. But the level that then gives you an idea of when the trend line has given in would be 160.60. So from there onwards, we could see a correction to 148.60 and possibly to 126.80. So that would be a 15%. So you'd make a 15% gain if it breaks upwards, and a 15% pullback should it trade below 160.60. So it's currently trading above those levels. All of them are trading above the correction underway levels, but it's good to know what those levels are.
Yes, and what
so that you can get in. Yeah.
All right.
But as you can see with that whole, and here's the summary, with all of that Dow theory, it does seem as if it's best to invest in stuff, in at least gold shares that have probably in the first and second phase.
And not necessarily the third.
Because the third is, although it's really delicious because it goes up high, but it's also very risky in terms of the potential pullback.
All right. Well, I mean, we do hear about the Dow theory from time to time, but it's actually great that there is an explanation and we actually see an illustration of it at this point. Right, that's the technical. Now, fundamentally, does it look like everything is supportive of gold at this point?
At this point, like I said, as a safe haven, let's be honest, gold has withstood every weather from wars to. So it does make gold, it's used for surety for many people. People like, they like investing in the commodity itself because it's got an appreciation value. So the only thing that would hinder it is obviously if the dollar, the price of the demand wouldn't necessarily, all of a sudden there's a supply of gold, but it's the correlation between the dollar and the gold. So if the dollar does strengthen, then the gold price is likely to pull back. So if we see that they happen to like the Trump policies better, we're likely to see the gold actually pull back to about 222.
Yeah.
That's if it breaches the 2022, but if it breaches the 2,680 mark. Otherwise, it's still on its uptrend.
And it's been very interesting because obviously with the Trump trade, we have seen a strengthening of the dollar, and a lot of us have been wondering how long is that going to last. But quite interesting that today specifically we have seen a softening of the dollar, where we have seen an appreciation in
because it can't go up too high.
Exactly.
You know what I'm saying? So that's the only thing you can at this point is probably ignore what the fundamentals are saying and just look at the correlation so that you can get a better perspective of whether it's a good time to invest in gold or not.
All right. Well, thank you so much, Moxima, for your time and really just giving us insights on what is happening there with gold and also those 3 gold shares. Really appreciate it. That was Moxima Gama, Senior Technical Analyst at the Money Hub. And that's all we have time for this week, but be sure to join us again next week for another edition of Trade of the Week.